Namaste, Varakkam, Baurada. Friends, today I will talk about a topic which is in spotlight right now in the banking industry, restructuring of MSME loan. I have worked in both retail and corporate credit, and I can confidently state that restructuring of corporate loan is a lot easier than smaller loans. The corporate customers are financially aware, and you have so many tools and experts who can guide you in the process. But in small loans, all you have is your experience, observation, and analytical mind to rely on. So today I will be discussing about small loans only, accounts which has no GST, no audited financials. I will narrate four main steps to restructure loans, show you how to write a gist of restructural proposal, and give you 8 tips that can maximize the success of the restructuring and also save yourself as a banker. So let's start. Before we begin, let's see how restructuring can benefit you as a branch manager or a credit officer. No SMA follow-ups, no recovery exercises, no risk of time-barred accounts, improved focus on other business parameters, last but not the least, increasing the profitability of your branch. Now, what is restructuring? Restructuring essentially means modifications in terms of credit facilities for economic or legal reasons relating to borrower financial difficulty. So what are the kind of modifications possible? Extension of repayment period, EMI or repayment terms alteration, alteration of rate of interest, date of commencement of commercial operations extension. Now mind it, all the first three modifications can be due to change in MCLR or EBPLR, but that will not count as restructuring, okay? Our RBI in recent time came up with this coolest scheme. Let us see what are the highlights of that scheme. Restructured MSME accounts need not be downgraded to NPA under this scheme. Those who have ventured into restructuring knows how different it was earlier. The scheme is applicable from 1st January 2019 to 31st March 2020. The borrowing entity must be GST registered. However, that is not applicable if MSME unit is exempted from GST registration. The aggregate exposure by bank and NBFC should be less than 25 crores as on 1st January 2019. The borrower account must be standard as on 1st January 2019 and continue to be standard as on the date of implementation. That means we are dealing with SMA accounts, right? This will attract provision of 5% in addition to provision already made. However, this can be reversed subjected to satisfactory performance of the account during the specified period. If anyone wants to know what is satisfactory performance and specified period, they can refer to the description of this video. Post restructuring, the asset classification to continue as per extant IRAC norms. I will cover IRAC norms in some other presentations. So, what are the exclusion of this policy? First of all, willful defaulter, fraud accounts, or diversification of fund outside the business. In order to understand where we are lagging in this restructuring, I spoke with few officers and got their feedback. They are skeptical to take decision in the following cases, it seems. A closed MSME unit. Now friends, I have already enclosed the RBI policy link in the description of this video. I have gone through it. One thing is clear that this policy is for revival of MSME accounts. So tell me what is wrong in assisting a closed unit for its revival? Don't forget, there is always a clear demarcation between units which never came up, never existed. They actually took the money and flew. Those are fraud cases, which has to be reported appropriately. If you have not reported them earlier, do it now. At the same time, the truth might be that the person actually tried to do some business with rupees 10,000 or 1 lakh loan that was given to him, but he did not succeed due to tough economic and market condition. However, they are repaying some amount somehow to keep things moving. That is why the account is still SMA, not NPA. Am I right? One more case is when there is a change in nature of activity. Now, don't you think it is very common for a person to change the nature of the business if his earlier business plan did not work? No one pressurized you to give a false declaration in the process note. At the same time, no one prevented you to record the facts with possible evidence and move forward with your decision. RBI didn't prevented the banks from doing so. I believe your bank has also not prevented you. So who has stopped you? Next thing is civil default. A person who has defaulted in your bank might have defaulted elsewhere. Interestingly, this elsewhere includes NBFCs as well. That is why RBI extended this umbrella of restructuring to NBFCs. Nowhere in their guideline RBI has specified if the borrower is a defaulter in some other institution, his or her account cannot be restructured. I believe your bank has done the same in your board approved policy. For your safety, you can record the facts and findings in your process note and move ahead with your decision as long as there is convincing justification for the reason of default. Now let me help you with my restructuring algorithm. Just like 3 C's of credit, it revolves around 3 A's: alive, available, and ability. Here, alive means whether the person who has taken the loan is alive or not. Available means the customer is responding to your calls. He is approachable for restructuring the loan. But as per my understanding, most of you are concerned with the third one, that is ability of the borrower or the viability of the restructure as mentioned in RBI norms. So we will talk about it now. There is no black and white rule to judge the ability of a person in small and unstructured loans. So I will give you 8 tips to safeguard yourself while restructuring a small loan. These are only indicative list, not an exhaustive one. Let us assume you gave a rupees 20,000 mudra loan to a vegetable vendor. The loan is in SMA and you want to do the restructuring. First, let us go through the 4 main steps. Then I will show you a sample revival process note and guide you to build one of your own. Let us see what are the 4 main steps for restructuring. First of all, unit inspection. Assess the situation by first doing an unit inspection. If the old unit is running, then well and good. If he has changed his activity, then inspect that too. Don't forget to keep a record. Face-to-face interview. If you are convinced, then invite him to branch for a face-to-face discussion and try to understand how much he saves monthly. Try to know if he can manage any other sources of income other than his ongoing line of activity. Plan of revival. Chalk out a plan of revival based on the discussions during the interview. Documents. Application, financial information and loan documentations applicable for restructuring. Next, take all the documents and arrive at the financials. I will show you how to do that shortly. You must keep in mind, don't proceed with restructuring without compliance of post-release conditions and also compliance of observations made by inspectors or the auditors. Now, let us see what else you can do to safeguard yourself and also to increase the success rate of the restructuring. Verification of CBS entry from the day-end reports. Why I am emphasizing this? You must check the particulars, especially the moratorium, rate of interest, and of course the amount entered in the CBS system. A mistaken moratorium of 2 years in place of 1 year can cause the whole process to crumble down. Keep visiting occasionally, keep records of the inspection. I know practically it is not possible to prepare a report all the time, so better have a register. Believe me, it will save you in the long run if something goes wrong. You will also have a command on the accounts which you have restructured. Don't restructure accounts located outside your service area. Take permission of your administrative office if you are doing so. Don't circulate pamphlets and give a hype to restructure. You will attract wrong borrowers. Contact the SMA borrowers only. Every bank has a facility for sending bulk SMS. Contact your administrative office and utilize the facility. Make the borrower or his representative write his plan of revival in local language. Encourage the customers to fill up the application in local language. Now friends, it comes down to one last thing, that is preparation of process note of restructuring. You remember my example of 20,000 rupees loan for the vegetable vendor? You have to restructure it in such a manner that the repayment period is stretched. No additional funding is involved, no reduction in rate of interest. So, how to go about it? Narrate the background with a neutral but positive viewpoint. Note the tone of the language used. Don't hide if there is a change in activity. Now discuss the present situation. Give a clear picture of the present situation of the borrower. The compliance position is extremely important. Don't miss that out. The small things like security perfection, insurance, CGTMSE, etc. You may include any other relevant observations here, like remarks on civil observations and others. Now it's time for little improvisation. A striking difference in comparison to large corporate borrowers, where all the financial information are readily available. Write a summary of the face-to-face interview here. Flex your muscle because now you are going to draw the projections based on your understanding. Prepare the financials of the revival plan. You may choose to add other parameters of your likings, but eventually it's the DSCR that we all take into account. Of course, you can include the gross DSCR as well in your calculation. Generate the repayment schedule from the CBS, then simply drop it here. Summarize your recommendation in short but strong points. So friends, this was all about the process note of restructuring. With this, I conclude my presentation on restructuring of small MSME loan. If you like this video, don't forget to share it with your friends and keep encouraging me with your likes and comments. You can also choose to watch the other videos which are getting displayed on your screen right now. That's all for now. Thank you. Goodbye.